Okay, so let's check out some of the market direction for uh, the majors, and I thought that we should look at some of the forecast on trading view. So over here we have the euro dollar. We just zoom in. This was for last week. So it went pretty much on point. Okay, it went pretty much on point. Let's have a look and discuss some of the ways maybe you can actually enter this trade, or how I entered this trade. So as you can see, this was the first move up. Some people will enter the trade somewhere, maybe around here. They'll be interested to enter. That's one way to enter. Did I take this trade to the upside here? Personally, for me, no. Because for those who understand time practice style of trades, right, what I actually need is something actually much bigger. So what I'm very interested here is an entry right here, because the time basically is much better. All right, uh, we give time for this wave to develop, followed by an upward move. Now this upward move, you actually want it to go all the way to the upside, but it was Friday, you see, because it was Friday. So even though I was in the buy, uh, and I'll tell you the buy was all over here, uh, you know, but I didn't keep it all the way to the upside. What happens is I usually, when it starts going here, I'll start to trail it. And because it's Friday, I do want to exit trade, not keep it over the weekend. All right. So now, why did I buy it over here? Well, first thing, of course, I'm quite confident in this movement, a strong wave and a sideways. The other thing is, of course, not only was there a good buy, but it just so happened that this was a very good sell as well. It was a very good sell. Why was it a good sell? Because often when people start to buy, these movement, it just suppresses. You can see it's moving real slow here. All right, and there's a double top here as well. A double top, which is suppressed movement, and then price continue to close back down below this level. So, and because of the hour of the day, you usually want people who are in the early buys over here to be stopped out. Because if these people can be stopped out, that means they'll be forced to sell over here. And if people are forced to sell, then we can buy, you see. So that's why it's a good idea not to jump in the trade too early on the Asian session. For, as I mentioned before, euro pairs, pound pairs, you don't want to jump in too early, especially if you're going for a swing trade. If it's a scalp, that's something else. But if it's a swing trade, it's always a good idea to wait, because when this goes, you can actually sell this down. Once it breaks this low, you're looking to buy this up, and then you trail, because this could go or it will pull back again. And why is this doing that? Because if it's really upside, guess what? People who are in the buys who don't know how to actually maneuver in and out, right, can potentially be stopped out here again. So when people are forced to sell, guess what? We can buy. Okay, this money here can be made multiple times. And what do I mean by that? It's made multiple times by this. Okay, so I just give you the ideas of how to trade stuff like that. See, you can buy it up there one time, when it comes back down again, you see that you buy it up again. So you can profit one time, two times. And basically how I profit one time, two times is basically I see the number of pips move. I think this amount of pips, I'll take it off. This one, I'll let it trail, because the first move up usually is not the one that's going to fly. Right? Price always comes back to areas of big volume, or place or prices of interest. Okay, price of interest. When I say volume, what do I mean by volume? Like this kind of areas here. These are areas of big volume. There's a lot of transactions going on here. This will be a major battle, basically. So if price doesn't go, it will often come back to these major areas. Do its stuff, break below, start to go up, but cannot go, come back again, then it goes. So the only way I think to be good at such things of getting in and out of the markets, and boils down to the trade execution, would be being able to scalp well. So you'll be staring at the 1 minute, 5 minute charts, and then you look at the price, and then you know how price is going to move. Okay. You can't show it here on this chart in a moment because this chart trading view only allows 4 hour, 1 hour, 15 minutes. So anything lower, you cannot really publish it, right? But yeah, I think practicing some scalping is good for good. It's a good skill to learn as a CFD trader. So let's go on. So over here, this was double top. Then this was an engulf over here. You can see how red took out the green. So from here, moving average, you can sell it down. And from here, you need to exit because you are very interested in this move and this move to the upside, or if this one came, it could go, but it can also stop people out here. So now the trick is this the one that's going to go? Because this one could have gone, but didn't go. So maybe this one is the one that will go. You have to go far. We'll break this and break that. That's possible. So good. It's still a buy, right? It's still a buy. Places you can buy. This is a good buy. This is a good buy. This is a good buy. This also is a good buy. So now hopefully you get something. Price action is very personal. Some people, a few ways you can trade. First, some people enter big lots. They take out some, depending on where the stop loss is. Some people put small lots, and they just average. They can average in and out as per how they feel comfortable. You know. So instead of putting one standard lot, maybe they put one micro, 0.1. You know, maybe here, if it comes lower, they put 0.1. If it breaks here, they put 0.1. So just average down. And if you hit some figure that they feel uncomfortable with, that they think, so they just close it off at 200 loss. But you're basically putting small lots in. Okay, some people will put in like big lots, and then this is maybe $100 loss, right? And if it goes here, this amount, so distance, the takeoff, maybe half. So the loss, now potential loss becomes minus 50. And they may not even take off the trade because you don't want to let it go and then come back, take off a break even, and then continue, right? So the idea of putting big lots at the beginning and taking off half is just to take risk off quickly. And it really depends on the individual. I think both styles can work. I see, yeah, both styles can work. So just continue looking for the upside. Just keep trying, seeing, you know. Just keep trying and seeing. Look for the upside, draw your trend lines, and look for the breakouts. Okay. Aussie dollar swings. So this is all price direction and bias. Price direction and bias. So if you can see here, what's all this about? Well, basically, you're looking for this to go up, looking for this to come down, and maybe even break the low again. Remember, people who are in the early buys can be forced to lose their positions if this price is forced below. And if it's forced below, it's often a good place to try to buy here at the bottoms here. You know, look for some kind of like this and then a wick up. It's often a rejection of the area and people having been stopped out of their positions. So if you can see something like that, these are all very good buys. So you have to look out for it. That's Aussie dollar. So this one was pound Aus. Because pounds was approaching a place of interest, you see. So you draw one trend line, and then this is what I mean. You see that? What happens? It goes below, it comes up again. Exactly what I mentioned for the Aussie dollar, which is what we should be looking out for. Because when that happens, you start to get this. See this upward move? This upward move is what you are basically looking for. Right? So that's pound loss and looking out for price action. Remember, see this dangerous thing, and you're looking at for this at the key level, right? Not I won't talk about support resistance. I just say it's a key level. Look for price action for a reversal. Yeah. Okay. So just to be more clear. Let's be more clear. Okay. This one here is basically what I'm talking about on Aussie dollar, right? So Let's be more clear like this. If it breaks below, doesn't mean that, it broke. It broke this below here, sell. No, that's not right now. Okay, so you gotta know what we are looking for. Okay, pound loss. EuroCAD. Let's go through a couple of charts. Let me see here. So the EuroCAD. Yeah. So the reason for this, well, if you can see, 1, 2, 3, basically. Yeah, this is all place to buy. See all this? Good place to buy. Long distance is the third wave. So you're looking for at least this. It went up, but this could have also collapsed, right? Yeah. Hold on 1 second. Okay. Yes, we're back. Okay, so I was clear the drawing. So yeah, so basically that was what it was. So definitely you're interested in this area. And idea is like impulse correction, impulse idea. But this would have thrown off a lot of people because it was so sharp. It was so sharp. Okay, so it was a good buy. It was a good buy. This one. Just gotta pick this bottom here. Really. The main reason is because of that, and also because of this. Like, see this upper bottom? Yeah, go up, come all the way back down, impulse correction, and upside. So this whole pattern was very important. Right? This whole pattern was very important. So this was really, really good too. Go bulls pattern. So yeah, so you can see gold went up, came down, went up, came down, and it's now here. Gold actually looks up until a certain zone here. These are all the danger areas. You could remember the idea of profit theory. If people are in the sales and forced to liquidate, right? They'll be forced. The buy stops over here. So the stop hunts are real. If you think it's not real, actually it is real. To me, it is real. Because for me, when I'm looking at this, if I want to sell this, what's in my mind? So I want to go and stop out people who are right there. I'm telling you, that's what I want to do. If I have the power to move the market, I know there are stops over here. Must be buy stops right there. Because people expect levels of this whole. You basically will know that if you want to sell, this is the best place to sell because people will be under pressure. And then when he goes up there, he stops out. They expect all these levels to hold, and when you don't hold, they'll quickly close. And if they close their position, profit theory says, if they are in the sell, now they buy back their position. I'll sell. So I will sell high, buy low. That's how you make money in currency. This how you make money in currency is 101, basically. Okay, so let's clear this. So go. Oh yeah, this bounce, pound loss. This chart here is very related to. It's related to the earlier one. Like, see here, this one, pound loss buy. This pound loss bounce area is related to this one actually. So it basically, big picture tells me that tells me at the key level is I should be looking for a buy. So at this key level over here, I'm looking for a buy. This is a 15-minute, this is a 4-hour. Okay, so if this is of interest, let's go take a look. So if you just take a bounce here, you'll be in serious trouble because there will have been pressure, you see. Ultimately, it did go up. It's true. But as a scalper, you don't want to scalp here on this kind of levels without looking at what the lower time frame is saying. Because all you see are big candles, you see. There is no sign of any bullishness, basically. Okay, so however, we just go to the lower level, then you start drawing all these trend lines, and you can really see all the things that I'm saying. Because on the 4-hour, you just see a big candle like that. You see, you don't know what's going on. Just hoping that past support, so-called, will hold. But if you actually go down to lower time frame, You take the time, you know, double bottom trend line here. Then you can try, you can draw lines and actually see price just slowly just going sideways. I see price just going sideways. But if price look like this, see, like this, it's quite scary to actually buy it basically. Okay. Uh, yeah. So yeah. So use a 4 hour. Use a let this continue falling and the key zones try to look for the scalp the reversal. I think that's fine too. Mhm. So yeah, what was this? Oh, this one actually did not break. That's why here, you see, it's very important. Very important. It did not break, you see, and pull back. It did not happen here, but it happened much lower. You see that? So this movement, yeah, there you go. See, this movement that you're looking for, uh, the break and the pullback happened below, not here, but happened here. So it's instead of buying here, if you had wait for this and that, that means your timing is perfect. That's what make a hallmark of a good CFD trader. Uh, if you, yeah, good timing. So you don't have to live through this, don't have to live through that. You just go and you make money and you get out. In just the execution is maybe 15 minutes of clicking the button and waiting for a trade to mature. But the waiting time is the one that is part of the business, right? Doing nothing is part of business. Just sitting around and just watching and waiting until the opportune moment. Some charts that I drew, but I did not trade them because it's. But the forecast idea. I just shared the idea. All these important zones. See, when it comes here, you must know that stuff will happen. So when it reached there, you see immediately what happened. Stuff happens. So if someone were actually trading cat yen the downside, if they actually trade this down and they don't exit the trade, maybe they just want it to go forever. One must know that this is where stuff can happen. This level important. Right? So it came here bounce. So now it's doing sideways. So if you want this to actually return up there, you know, I have this line over here. So for me, just wait till it comes out of the line here, does price action, then that is your direction. Then how we enter, I think if seasoned traders will know how to enter, and they have their own way of entering, and the risk will be personal, which requires practice, right? So depending on the size of your account, you know how much you want to risk. That 1%, 2%, 3%. Some people risk 10%. You know, if you have a big account, if your account is like 6 figures, maybe 7 figures, you can risk 1 to 3%. But if your account is very small, well, then you of course you would risk more. You will risk more because you want to quickly flip that account. I can understand. It's up to the individual. Because sometimes let's talk about this a little bit more. So, people are able to comfortable losing 1,000 in order to make one in order to quickly flip the 1K to a 5K, 10K account. They're willing to risk much bigger lots, 10%, 15% a trade. They want to flip it quickly. But if you have a 100K account and you risk 10%, a 100K account, 10% risk, and if you lose it, it means that's a 10K loss. Well, not everyone is comfortable losing 10K. You can lose 1K, which is the entire account, but you cannot. They don't feel comfortable losing 10K of from a 100K account. Um, it's I think it's up into the individual, but majority of people will not want to lose $10,000, even though the account size is huge. And it might be 100K. They may not they won't be comfortable losing 10K. They will just want to lose maybe $500. Maybe that's okay of a 10K account. But $500 of $1,000 account, uh, that's a bit much. I would say maybe if you just lose If you want to really risk it, right, for 1K account, you can risk as much as $100, but not 500. Yeah, risk as much as 100. But you may not want to risk 10% of a 100K account. Yeah, and 3% of a 100K account will be fine, if you ask me. And if it's a 1K account, then just risk much more, because I understand the feeling of wanting to double quickly, but understand that on the flip side, you can lose your entire 1K as well if your skill is not good, right? And what's this? You cat staying the trend. Yeah, just stay the trend until it ends. So here it went up, stay the trend until it ends. Boing. This looks like a. So let's say this is going down. This is actually a good place to go. Stop people out, then flip down. If you ask me, that is the best way to make money. Because there must be sales here. You can stop people out of their positions, take over the sales, and run. So that's why the thought of double bottoms. There's a reason behind it. It's the reason behind, yeah. Yeah. So I think these are some of the biases and some of the explanations. Why to look for, why and what to look for. Right? Profit theory is the why, and what to look for are key zones and timing. Right? So what are key zones? Again, like this example, key zones, right? Key zones to look for. Do I take the bounce? If I take the bounce, the lot size must be small, because if it goes further down, then I'll be in trouble, right? If I go further, I'll be in trouble. Right? But if you don't want to put in small lots, and instead you go down lower time frame, because again I said these are linked. If you don't want to average down, then you must really watch all this price action in the lower time frame. And look for the breaks, look for double bottoms, look for engulfing candles before buying, right? So that's it. Hope the sharing helps. Okay, I'll stop here. Bye.